morning. Welcome to this week's market update. A drawdown on Friday caused all three major indices to finish negative last week. The Dow lost 1.3% and is once again in negative territory for the year. The Nasdaq and the S&P 500 lost 0.6 and 0.4% respectively, but still remain positive for 2025. Concerns over an escalating conflict between Israel and Iran rattled equity markets and sent oil prices soaring to end the week. Historically, the impact to U.S. stock markets has been short-lived when international conflicts have caused oil prices to spike. Over the past 35 years, there have been 6 major oil supply disruptions, and in 5 of those cases, the S&P 500 posted positive returns in the following year, according to FactSet. Economic data released last week surprised to the upside. Inflation figures for May were better than expected for both consumers and producers. Headline CPI came in at an annual reading of 2.4%, while PPI came in at 2.6%. These readings are welcome as concerns over inflation spikes have been mounting since the first quarter. Consumer sentiment also jumped with a fresh University of Michigan report revealing a 15.6% reading increase from last month. On deck for this week is fresh retail sales data and the June meeting for the Federal Reserve. While it is widely expected that there will be no change in the Fed funds rate, we will be monitoring whether this new data boosts expectations for a potential rate cut in July. We will also be keeping an eye on trade negotiations. Framework for a trade deal with the Chinese was announced last week by President Trump that would reduce tariffs from 145% to 55% and temporarily restore rare earth mineral licenses for U.S. companies operating in China. Additionally, the deadline for the 90-day pause on Trump's reciprocal tariffs for most other nations is only weeks away. However, Treasury Secretary Scott Bessent indicated that this may be extended further for partners demonstrating good faith in negotiations. Thanks for tuning in. Have a great week.